It's a bit of a mixed bag when it comes to Asian Paints. While the volume picture looks decent and the numbers are in line largely with estimates, but the commentary is not all that great from the management. They're definitely citing some urban demand slowdown as well. Let's take it forward with Priyam Tolia then. He joins in to analyze the numbers. Priyam, hi, afternoon. Good to speak with you. Tell me, how is it that you're analyzing the numbers from Asian Paints?
Sure. If you see from a volume perspective, then definitely they have given good numbers. However, versus our estimate of flat volume growth. However, if you see from the quality of the earnings, so it has been in a mixed bag. So definitely the margins has been under pressure again due to the not so good mix, which has impacted the overall margins. From an commentary perspective, management has guided that they are now cautiously optimistic in terms of the overall demand environment, and so overall the numbers are mixed from our perspective.
And what about the individual segmental performance? Does that match up with your estimates?
Yeah, so if you see, there is not much difference in terms of the individual segment performance, but we'll have to see how management give the comment in terms of the overall segmental performance in the call.
Rise in the competition, Priyam, help us understand that how are you penciling in the margins for Asian Paints in the times ahead, because definitely the 19.1% is what we have clocked in this time, is been at the lowest when I compare it from the last so many quarters now. The margin slipping below 20%. What does it mean for Asian Paints, and specifically what's the outlook going ahead?
So yeah, definitely. If you see, like you have correctly said, that the margins is been the last lowest quarter was in Q2. However, they have improved in some sense in terms of the margins when you compare to 19% in the Q3. So they have definitely done that. But the concern with regards to competitive intensity, what we expect is that the margins are likely to be under pressure in the coming quarters as well. And so, yeah, definitely that's a concern.
Priyam, I mean, the stock has seen a significant derating ever since, Birla Opus announced that they're going to be launching in the market and perhaps eating into the market share as well. You think that derating is now behind us for Asian Paints?
So see, from a valuation perspective, and like you said, we are seeing that the stock has reacted positively despite, mixed performance. If you see from a valuation perspective, it is trading around 37, 38 times of FY27 of our estimates, right? So valuation perspective, then definitely it looks attractive. However, we at the company, in order to sustain the share price movement, the company has to deliver some improvement in terms of the overall performance on a consistent basis. So yeah, from a valuation perspective, it looks attractive, but we will be watch out for how the coming quarters come in terms of the overall demand environment as well as the competitive intensity.
Current rating on the stock and target price, Priyam?
So we currently have a hold rating, but we will revisit our estimate post the con call only. So we have a current target price of 2,700, but we will revisit our estimate post the con call.
All right, Priyam, with this, we'll let you go on that. Thank you so much for taking the time out and helping with your first cut on Asian Paints numbers. So that was Asian Paints commentary from the analyst itself. Almost a 2% jump is what we are witnessing on the stock right now. But moving on, let's also welcome Devin Choksi on board. He's the managing director of DR Choksi FinServ. And hi, Devin. Thank you so much for joining. And first up, help us with your take on Asian Paints. The numbers look quite okay, but the management commentary is not that exciting as of now. But given the valuation picture, do you like the stock at this point in time?
Yeah, good afternoon.
Good afternoon.
Well, to begin with, I think the downside in the performance is definitely protected by the company. In fact, as against, I think, the flattish kind of a growth, there is a marginal improvement in the growth. So that's the first positive thing, because up till now, all these quarters, I think we have seen the fall. I think from the fall, it has come to a stability level in the performance, which is fundamentally good. Second most important point to observe, the margins are protected as against, I think, the fall. The margins are protected. So that is again a good sign. Now, the third question will obviously come up, and that is where management commentary is playing a role, is about the growth. I think the growth is not appearing to be as smart as one would have thought about, because I think of variety of reasons. In my viewpoint, I think minus the whole year, where probably we have struggled in most of the project execution as a country as a whole. Probably, I think even segment like housing also has struggled. Should this recovery take place in the current year as expected, then probably from this time onwards, I think you should be seeing a better time going forward. Maybe the validation of this particular viewpoint could happen in every successive quarter when we interact with the management. But as of now, it is a happy situation that the downside in the performance is now protected. Maybe I think buying time is still not right, because again, I think one FY27 perspective, if you look at the company, it's still not, I think, trading cheap. It is expensive in a way, but the fact is that I think the business condition, if it improves, then there will be a scope for relooking at this company.
Right. Kunal, hi, afternoon. Welcome to the show. Tell me, what are the charts for Asian Paints looking like?
I sense that the stock is bottoming out. I strongly believe that the worst for the stock seems to be behind. We've seen a very strong surge on the indicators for Asian Paints in the last 4-5 days. So it's not just the price action, because when you look at the price has come back to the the December highs for Asian Paints when it came closer to that 2400 mark. But the indicators have come back into almost like a 4 to 5 month swing high, especially the daily RSI. That generally indicates that the stock is forming a stronger bottom or a base at the current levels. So maybe some bit of volatility on the back of results, but then if in case the stock dips down back towards say 2200 2250 mark, that could be a very good risk reward territory to go for a contra buy, because generally we've seen that whenever indicators start to lead the price action, that generally is a strong indication that the prices bottom out very quickly, and you expect a V-shaped recovery or a very swift rally into the stock.
All right, so signs of bottoming out when it comes to Asian Paints. So that was the analysis on the numbers, as well as we also got the chart check from Kunal. But back to the markets, for Nifty 50 right now, we are holding on to the gains of over 300 points, while for Nifty Bank, almost 750 points of jump is what we are witnessing. And a lot of these financials are taking it from the front. Stock case in point being IndusInd Bank, that is holding strong with a gain of 3%. Even HDFC Bank is also supporting, and Axis Bank too is one of the top gainers in Nifty 50 right now. But Kunal, any of these three large cap banking stocks, any stock that you like at this point in time? Because of late, what every day we are witnessing is that some or the other large cap is coming in front. Yesterday it was Bajaj Twins. Today it's Reliance as well as HDFC Bank supporting the markets. So what's your take?
Yeah, I think it's a classical sector rotation, or within sector is also large cap rotation which is playing out, and that generally is very healthy sign, at least in the initial part of the market rally. Because look at it this way, the last 3-4 months had been torrid for the markets. So I think in that sense, the initial phase of construction or a reconstruction of a trend generally begins with large cap stocks, and if you see a very strong bout of outperformance on a select large cap names, then the markets get a lot more frothy in those large cap stocks. But that's not the case this time around. You're seeing large cap stocks rotate quite happily. Yesterday it was, for example, few select auto names which were doing pretty well. Bajaj Finance, which was doing pretty well yesterday. Today you have a completely new set of stocks, and the ones which were doing extremely well yesterday, they've taken a pause for themselves, or at least a very mild kind of an upside for these stocks. So that indicates that the market breadth is widening, at least on the larger cap front, and with support from large cap stocks on every leg of the market up move, that indicates that the markets would probably move on to the supports on the higher side. We were discussing in the morning that after that 100-point gap up, my expectation was at least another 400 points on the upside. We've gotten an additional 200 points on the Nifty so far. My expectation is that at least another 200 points to 50 points could be in the offing over the very, very short term.
The one casualty today is Trent. That stock is down about almost 7%. Now, the big fear in the market is the re-entry of Reliance Retail with Shein, which is a banned Chinese apparel maker. Remember, it was banned about 1.5 2 years back, and now with Reliance Retail, that marks a re-entry with its new app on February 1st, which was launched, and that sort of caters into the same category which Trent has an exposure to, that's Zudio, affordable branded apparel. Devin, how much of a concern could a competition from Reliance Retail turn out for Trent?
Well, that will be a reality, actually speaking, because I think on equal basis, if one looks at it, I think all the components, all the KPIs, as we call it as, I think they would probably fall in place, same as it is for Trend, will be with Reliance Retail. Starting from end-to-end, I think process of manufacturing to marketing, I think it will be on equal footing. So there is going to be a competition, no doubt about it. And I think this format is successful. That is also clear. So I think there is going to be competition. Now, whether I think in this competition you will protect the margin or you will keep on growing, I think the time will tell. In my viewpoint, I think as of now, everything seems to be in price as far as the trend is concerned. Maybe I think if it goes further up from the current levels, that would probably mean some amount of profit booking coming into the stock going forward.
I think on Saturday it did surge post the budget announcement, and it did go back to those 6,200 kind of levels. But Kunal, a further correction on Trent, you think?
Doesn't look like. I believe that again the stock. So what's happening is stocks which were doing pretty well for themselves on the budget day, and the ones which are correcting, which had corrected on the budget day, the markets are going through a phase of a correction of this aberration. The move, for example, many of these the railway stocks, the defense names, they were beaten down on Saturday. These stocks are making a comeback. Then you have the FMCG stocks, the likes of Trent, etc., which are doing pretty well for themselves. Even ITC, those stocks are taking a bit of a backseat today. So I think it's just about a play for the market in terms of the phase what we are going through. My sense is that the volumes which have moved up higher for Trent in this recent leg of uptrend from 5,400 levels to almost 6,100 marks a short-term bottom in place for the stock. So maybe another 100 point, 150 point dip to that 5,500 levels for Trent. That could be a good buying opportunity from a contrarian perspective.
All right, so that's the fundamental as well as technical check when it comes to Trent. But with this, viewers, it's now time to slip into a very short break. Don't go anywhere. We'll be right back with more. Welcome back to Closing Trades, and good move continues on the benchmark indices, because for Nifty 50 we are now seen to be touching that 23,700 mark as well, and on a YTD basis since the start of this year, Nifty is actually ready and almost there to surpass, or rather make this year neutral for itself in terms of the return after that dip that we have seen in the month of January itself. But a lot of earnings underway. Let's move on and let's put the spotlight on Titan. That could actually see another steady quarterly performance as the studded jewelry business and Carrot Lane are expected to clock robust growth. Snehi tells us what the street is expecting. Snehi.
Well, absolutely. So here's what to watch out for when Titan declares its Q3 numbers. And on a standalone basis, revenue is expected to come in at 16,320 crores, which is an uptick of 26.4% on a year-on-year basis. Brokerages are penciling in an uptick of anywhere between 20 and 26% on the revenue front. So that's going to be an interesting number to watch out for. EBITDA is seen to grow at 13.3% at 1,651 crores. Net profit also, we're expecting a very small uptick of 2% on a standalone basis at 1,060 crores compared to 1,040 crores on a year-on-year basis. Margins, however, are expected to be slightly under pressure at 10.1% compared to 11.3%. Now, a big key expectation here is that a one-time inventory loss of anywhere between 200 and 270 crores is expected on the back of the reduction in custom duty that was announced in the interim budget earlier, but the overhang of that is expected to be present in this quarter as well. Now, as per the company's Q3 update, standalone jewelry sales grew 26%, studded jewelry is expected to grow by 21%, watches by 13%, eyewear anywhere between 17 and 18%. Tanishq on a like-to-like basis is expected to grow by 15% year over year, and Carrot Lane expected to post a robust growth at roughly 25%. The company is expected to have added 69 stores during the quarter, taking its total store count to 3,240. Some important factors to watch out for when the numbers do come out: commentary on how the festive season has been, how the wedding season has been, demand trends, profitability across segments, and competitive intensity and product mix. So watch out for Titan's numbers. But well, yes, on a standalone basis, revenue expected to go up anywhere between 20 and 26%.
Okay, that's the expectation from Titan right now. What you're seeing in the market is a big reversal of Saturday. So, capex is actually making a comeback, and it's consumption which is actually petering down. Look at ABB, look at NCC, BHEL. Now that Trump's tariffs have taken a bit of a pause, you have a Motherson Sumi, Sona BLW. All these stocks actually hold out. And on the flip side, I mean, not just trend, because that seems like a special situation today, that big threat from Shein, but a UBL, you've got a Bata, which is down, Nestle, Tata Consumer, Aisha, Britannia, Hero MotoCorp, M&M, all of these names are seeing a bit of a slump in today's trading session. Devin, how is it that you're maneuvering between this sort of jugglery which is transpiring since the budget on capex and consumer and the switch out and in of both?
So except for the momentum play, I think most of the fundamentals are as it is. So I think there is no need to juggle the portfolio so much because of the budgetary announcements. Do agree that I think there is going to be a thrust towards consumption, largely because of the fact I think that a lot of money has been left in the hands of people for spending. But at the same time, I think this is also going to get reflected over a period of time and not immediately. So if the consumption is a reality, then probably I think one can buy the stock when the market gives an opportunity at lower levels. Just because of the momentum is better, and I think the consumption-related stocks has gained the valuation again. I don't think that immediately it is a good idea to buy them. Uh, this year, 2025, is also going to be the year in which we are likely to see a lot of opportunities coming our way as investors on the valuation side, because some of the weak hands are shifting out of those counters in which I think they had entered into with the momentum trading purpose. And that's going to be, I think, a good advantage. Whenever some major attack takes place on the stock price front because of the weak hands are going out and the quality of fundamentals are strong, probably it would be a good buy opportunity, be it consumption or be it other infrastructure companies.
All right, so that's the take on all these capex related counters. But the other stock in focus is Godrej Properties. Just a while back, we also had the numbers. The numbers look quite okay, but the company is also saying that they are on track to surpass their FY25 booking guidance. And what we see is the stock is holding on to the gains of almost 3% right now. Kunal, a chart check by you. How do you see Godrej Properties?
So my sense is that the real estate stocks may not make a very strong comeback on a sustainable basis. What you're seeing right now is the first leg of a short covering move, and the reason for that is look at the last 4 or 5 days of volumes for Godrej Properties. The volumes were just about half of the volume the stock had seen on the cash days. When the stock was falling or had fallen aggressively from 2400 levels to 2100 2150 mark for Godrej Properties. Today is the first day where you're seeing the volumes move up higher. But if we lack consistency of volumes into these stocks, then eventually these stocks may just about get the rally may fizzle out, and these stocks may either get into a correction mode yet again, or they may go into a time-wise consolidation. So I would not be too much gung ho about these real estate names as of now, unless there is a strong evidence over the next maybe few days that volumes have started to make a comeback and these stocks are trying to protect their previous day's swing lows. If we see that pattern consistently for the next 2 or 3 days, only then I would believe that we could probably expect a much more stronger trend.
All right, that's the take on Godrej Properties. Not a buy right now, but yes, the volumes are seeing a bit of an uptick. But Devin, help us with your take on some of these defense-related counters as well, because as we know that there has been a bit of a disappointment, or rather, the kind of capex announcement was not as per expectation, and given the kind of run-up that we have seen in all these counters for the past couple of years, there was indeed a valuation correction is what we have witnessed. But for today, a good bounce back, what we see in stocks like BEL, HAL. So given the valuation comfort, will you be a buyer at this price point, or will you still want to stay away from these names?
So I think many of the companies have corrected on the price. And I think given the fact that in the last 3 quarters, the government has been a little bit slow spender. I think in spite of their budgetary allocations, they haven't been releasing the orders. They have not been picking up the material also from factories. And as a result of which, I think the books of the companies who are suppliers in the defense side of the defense items, they are the ones I think who have been reporting little bit muted results. Whereas the situation is turning, and from December month onwards, the government has started spending the money and actually started placing the order and buying the material whichever has been contracted for. So in my viewpoint, fourth quarter will be distinctly different compared to what we have seen in the last three quarters of this financial year. So given that kind of a situation, some of the companies definitely for sure, when the price correction is sharp, they may see the stability slow bounce back going forward into the stock prices. Some case, I think the valuations are still expensive. It's not so cheap. So one will have to wait and see whether the downfall in the performance of the company is arrested. Should that be the reality, then maybe in the next step we will find the buying emerging in some of these stocks. Fundamentals have not changed. I believe that I think even in the current budget of FY26, the allocation of money towards defense has probably gone up a little bit, even if it is not significant. But I believe that I think the business fundamentals remains absolutely intact as far as the sector is concerned.
Okay, that's that on BEL. In fact, let's take a look at some of these capex plays. ABB holding up 7%. You've got NCC higher by 6.25%. BHEL is looking very strong. And some of those defense plays as well, the likes of HAL, etc., looking very, very good. Kunal, any of these names you think are trade worthy right now?
Yeah, I think HAL, BEL, BHEL, I think all three of them are very strong in terms of the chart patterns. I was discussing in the morning on the chart busters that HAL has formed a classic triple RSI divergence, where the stock in the last 2-3 weeks or so has formed three price lows on a consecutive basis, and on all three occasions the RSI had actually made a higher low. That's a classical setup of a RSI divergence, and eventually when the prices correct this kind of a divergence, we see a very strong V-shaped recovery or a rally into these names. My sense is that HAL should come back to that 4,200 to 4,400 kind of a zone, so which means potentially another 300 to 400 points at least on the upside is what I would expect for HAL. And same is the case with the other name, BEL. For example, I think that stock in the last 2 days prior had seen a very sharp correction, almost a 10% kind of a correction from 300 to 265, 270 thereabouts, which means that in this leg of price uptrend, we can expect the stock to come back to the 300 levels. BHEL could be a very interesting case. The stock yesterday formed a classic bullish hammer formation. There was a gap which was created into the stock yesterday, and today the stock has not just filled the gap, but it's also gone through a contradictive move with respect to the hammer formation. So that indicates that we could be looking at a major bottom for BHEL. The risk reward favorable for all three names, and that's why they look attractive.
All right, so that's the take on all of these names, but HAL was also a chart buster idea by Kunal in this particular morning, and in intraday basis we have seen good moves coming in, but along with that BEL as well as BHEL is something that he likes at this point in time. But that's the take on all these defense related counters. But with this, Devin would like to thank you for taking the time out and speaking with us this afternoon. But getting back to the markets, since we are almost at the day's highest point right now, and at the bottom you can see that it's big boy Reliance that is also supporting throughout. It's been a 3% jump is what we are seeing on Reliance Industries. But for this, let's move on and let's also take the closing trade picks from both of our experts. And Kunal, tell us which stock are you looking at this point in time?
So it's from the defense name. HL is something which is looking attractive. So I think even at current levels of 3,700 thereabouts for HL, I think the risk reward is extremely attractive. The stock today I think has also moved on the back of much higher volumes than what it had shown in the last 3-4 days of the price correction. So that is also another reason to substantiate the kind of up move the stock has shown today, and that could be sustainable over the next couple of days.
Okay, that's quite a conviction on HAL right now. Continues to be a buy. We're going to take a very quick break. Come right back. We'll continue tracking markets on the other side. Back with closing trades right here on ET now. Good bounce in the markets. We're holding up a good 250 points thereabouts, at least for the Nifty future. Sorry, 350 points, not 250. ABB powering ahead about almost 8%. NCC higher, BHEL, Cummins. These are all names which are looking good. In fact, the biggest sectoral leader today is cap goods. Other than that, financial, cement, infrastructure, power, the entire capex theme is sort of reversing trend. I mean, momentum as it may be because consumption is not working out well today. So even an L&T, BEL, all those stocks which were getting thrashed out after the budget on Saturday, they're the ones which are actually seeing a bounce. Reliance is holding up very smartly, a solid 3% of a move, and that single-handedly is lifting the index up, along with, of course, L&T, which is now surging almost 5%. Trent is not, Bata is not, UBL is down. And then, of course, the likes of Britannia, Nestle, Tata Consumer, Eicher, Hero, the entire consumption basket is where you're seeing maximum amount of reds. Shivangi Sarda as well on the show with us. Shivangi, hi, afternoon. What trends are you spotting in this market with this big reversal from what we saw on Saturday?
Having me. So we've seen, bulls are back and in action, of course. But of course, there has been pockets of buying, especially in heavyweights, that have lifted the entire spirits of the market. Now, specifically, I am looking at a travel and tourism pack, which is looking quite positive. The first pick on my radar is Indian Hotel. The stock has witnessed an excellent short covering move on Saturday, and you've seen that the last two sessions follow up has been extremely good. The volumes are adding up, which confirms the uptrend. And on a higher time frame, if we look at the monthly chart, this stock has been trading in an upward sloping channel, maintaining its upward trend line. So looking quite positive even from these levels, and there is a good upside potential here with a good risk reward. So recommending a buy here with a target of 860 and a stop of 810 zone.
Right, so that's Indian Hotel is what Shivangi is liking at this point in time. But Sudeep, help us with your calls on the overall outlook on the markets, because as Shivangi was highlighting that the bulls are back in full charge, and what we are seeing is there's been no stopping. But what's catching your eye?
As far as market is concerned, I think we are in for a period of volatility. To assume that this excitement, which is we are seeing today, will continue, and we can't extrapolate that straightforward manner. I think we will have to wait for some more time before things settle down. The tariff which the incoming president had imposed on Canada and Mexico got reversed, at least held back at least for a month. And that is what the market is cheering. But US futures is already moving into the negative territory. So there are a lot of other things which are happening. China has already retaliated with counter tariffs on multiple American products, which has been announced today. So we'll have to wait and watch how things move in the future. As far as markets are concerned, I think there are a lot of interesting pockets which needs to be looked at. And beyond this tariff and budget excitement, one sector which I like is specialty chemicals and chemicals. I think after many quarters of underperformance and pressure, it was actually a bombed out sector. Things have started improving. The numbers which have been coming from these set of companies for Q3 have been decent. And probably the green shoots of revivals, a turnaround is very clearly visible. So, and the valuation is very attractive in this sector. So whether it's an Aarti Industries, whether it's an SRF, whether it's a Deepak Nitrite. So I think these are the stocks worth.
Frozen that connection. Just going to get back to Sudeep in just a second. But why is Trent falling and Reliance rising up? We've got Jinay to answer exactly that.
Well, yes, Trent is under pressure. Well, we have a note by Elara Securities, who are maintaining a buy rating on Trent with a target price of 8,500. Now, what they believe is firstly the Shein app, which is making a comeback in India after its 5 years ban. It has partnered with Reliance Retail and has relaunched on February 1st, the app. Now the app has initially will operate out in Delhi, Bengaluru and Mumbai, and it has already got 10,000 downloads on the Play Store. Now if you look at Shein, it is basically known for its affordable range of western and fast fashion. If we talk about competition in India versus Shein, the fast fashion offers a fast growing opportunity, and the entry of Shein will likely hit up the competition. Now Elara believes that for Shein, establishing a reliable pan-India supply chain and delivering a model will take about a year or two, which is subject to again a brand traction going forward. Also, they're expecting that Trend's flagship brand Zudio, they will be capturing market share further, strengthening its brand recall. What they believe is that Shein's product offering resembles with that of Zudio. However, the price codes are mostly above 1,000 mark, whereas Zudio's price codes are mostly below 1,000 mark. They also believe that Zudio will further continue to sail through because of its differentiated offerings versus the recent entrants in the space such as Viewstar, Style Up and Intune, which are yet to meaningfully scale up yet. And lastly, Shein may also not possess competition to Nykaa Fashion, as Nykaa Fashion's overall AOV is much higher at 4,000 to 5,000 rupees, and that is why Elara Securities believe given a buy rating on Trent with a target price of 8,500.
Okay, let me get back to Sudeep. Sudeep, can you hear us clearly?
I can hear you guys clearly.
Okay, great. We just lost you earlier. Sudeep, what do you think could be the ramification of Reliance Retail bringing up the banned Chinese apparel portal Shein into India, and what kind of competition could that, really imply for the likes of Trent?
Well, I think it's a very interesting space to watch out for. But I must very clearly mention here that the strength of Shein as well as Trend, that is Zudio, is completely different. Zudio is completely offline, and their success was on the back of the offline store expansion and getting the hinterland to buy fast fashion through offline stores. Whereas Shein globally and in India is supposedly going to be completely online. So I think these are two worlds, and not necessarily these always collide. Let's wait and watch how things pan out. I'm sure Reliance at some level will want to bring the Shein products in their stores as well, but that's not a disclosed strategy, or that's not how Shein operates worldwide. So I'm not too sure that it will have a direct, immediate impact on Zudio, that is Trent. I'm not that sure. It probably will have a bigger impact on the Mishos and Mintras of the world, not Zudio directly, immediately. But yes, long term, definitely it will have an impact. But we have to also assume that Zudio will improve their offerings, product, and market penetration as the time goes by. So I won't start going and selling Trent based on this news, or start buying Reliance based on this news. There are reasons for doing both, but they are different.
Very valid point made there, because this kind of a trade-off is what we have already seen panning out when we compare QSRs versus a like of a D-Mart, and till date both exist, and we are also seeing some bit of a bounce on Avenue Supermart. So same philosophy if we apply Trent versus Shein, is Sudeep highlighting that they both have their own markets. The brick and mortar model still exists for Trent. And let's see, but for today, definitely, given the competition arising, the stock is down in trade right now. But apart from that, what is making a good move today is the pharma index, because overall we are seeing almost a 2% jump in that, and all of these large cap pharma names from the likes of Lupin, Aurobindo Pharma, Laurus Lab, they are perking up in trade right now. Kunal, any stock that is standing out for you at this point in time? Because what I see that all these stocks rather are at the day's highest point and in for a strong closing.
Yeah, they are, but the charts are placed completely different for many of these names. For example, Lupin, the stock is just about getting into a recovery. So from a recent high of 2,400, the stock had fallen down to 2,000 mark. Today is the first day where you're seeing a more credible, price recovery for the stock. Volumes lacking into this move. But then, for risk reward play, this could probably turn out to be a good play for short-term traders looking at a buy on Lupin, expecting that the stock, even if it comes towards a recent swing high resistance, that could be a potential at least another 90 points to 100, 120 points up move for Lupin over the very near term. That's closer to 2,200 levels. For Laurus Labs, for example, that stock is clearly showing signs of a classical breakout, but it's a highly volatile stock. Just about last week, when the stock was in the thick of news flow, there was almost like a 100-point correction in a matter of 2 days for Laurus Lab, a 20% correction, and now we've seen the stock going through a V-shaped recovery. So that's the only concern with a stock like Laurus Lab, because of its extremely high beta nature. The stock may not like too many takers from a risk reward perspective, but for traders who are looking at a longer term trend emerging, I think Laurus Lab is looking quite attractive at current levels. Then from the other more contra pick, I would look at Aurobindo Pharma. That's a chart which has formed a triple divergence, bullish divergence setup. Recently the stock made a low of around 1130, 1140 levels, and now it's managed to come back above that 1170 mark. That's another name which is looking attractive.
Okay, those are some of the interesting trading ideas coming our way. But just look at some of the auto names too. Even though Eicher did flare up after its monthly sales data came by, and yesterday is when the stock reacted to that. You've got a Hero MotoCorp as well, which is easing off, and that's pretty much the case with M&M and Bajaj Auto too. Shivangi, what is your reading on the charts of the likes of an Eicher and let's say M&M?
now, and it is witnessing good buying interest. But if you give me a choice to compare out of the two, M&M is much stronger comparatively. And we've seen that it has been rallying from the last 8 trading sessions, and good buying can be seen over here. There used to be a previous hurdle zones of, around about 3,200 odd levels, which the stock did surpass today. Little softness from the higher zones today, but overall stock is quite positive. And I'm looking at the open interest data, which is also quite stable for this one. The stock is halting near its resistance zones right now, but overall auto stocks look quite positive, and this is one stock which will be more stable than the rest of the names, and we could look at levels of 3,300 odd levels next for this one, with a support of 3,150 zones.
All right, that's the chart check on some of these auto majors. But for today, clearly the theme has been the cap good related counters that are seeing a good bounce back. But other than that, some of these power finances are also holding on to the gains of more than 5%. And it's been throughout the day that we are seeing stocks like PFC and RSC holding on to such good gains. Shivangi, help us with your take. Any of the stock that you like at this point in time?
The names have been focused, and I'm looking at PFC. Of course, both of them have a very high correlation, but the stock has been, falling from the last 6 months, and we've seen that a small pullback move can be, of course, seen today. But it's important that it holds above 400 odd levels for the next rally to continue. Now, again, upside remains a little cap for both of these ones, and I would recommend a little wait and watch here for this space.
All right, so wait and watch is something that Shivangi is recommending, but amongst the two, PFC looks better when it comes to the chart check. Other than that, what is perking up is some of these jewelry related stocks, because stock like Senco, while Titan, we are waiting by for the numbers, are seeing good moves. But specifically on Senco Gold, Kunal, how do you see the movement? Because in the last 6 to 7 trading sessions, we have seen a good jump in this particular counter, but where is the stock headed?
Yeah, I think recently the stock also fell through a sharp correction from 750 to 400 thereabouts as the low for Senco Gold, and now the stock has come back to from 400 to 530, 535. Very V-shape kind of a recovery for the stock, but it seems like that maybe the stock would just about ebb off from current levels of 530. I would probably expect that 500 could be a much better point for the stock, for an entry into the stock, and I would probably expect that maybe over the next 2-3 days you might expect some bit of cool off, because the RSIs on the hourly chart after this 5 or 6 consecutive day of up move for Senco Gold have come back into an overbought territory. So expecting some bit of cool off closer to 500 could be a good entry point for short term traders.
All right, closer to 500 could be a good point for the traders, so all eyes on that. But other than that, what is doing well today is the metal pack, because in the international market we have seen a bit of a cool off in the dollar index. And Sudeep, given this point, any metal counter that you like at this point in time? Because what we are seeing is that even after a decent set of numbers coming in from Vedanta, the commentary there, even Tata Steel reported its numbers. So what is your takeaway for the metal counters, because they haven't been doing much of late?
Well, I definitely like Vedanta. As far as overall metals are concerned, there are a lot of volatility with what's happening globally and what's happening in China. So I can understand the reason for the volatility. But if I have to pick one stock, which is what you are asking, I think I'll go for Vedanta. Multiple reasons, including both aluminium and zinc globally doing very well, and the prices are at all-time highs or near all-time highs. And the way the demand-supply situation is positioned, I think it's going to continue for some more time. Also, I must say that the entire demerger which Vedanta is going through, and creating 4 companies out of the current Vedanta, and I understand the shareholders' approval is expected sometime in a couple of weeks' time, and post that the formalities should be completed in few months. So significant value unlocking possibility does exist from a shareholder's point of view. So I think if I have to pick one, I'll go ahead and pick Vedanta at this juncture.
Sudeep, how critical will be the policy this time around on Friday? There is heightened, consensus that it could be a rate cut. Would that, you think, fill up the market further?
Well, I think market probably has already factored in the rate cut. So it's a bit of a concern, I would honestly confess. But rate cut definitely is sentimentally good. RBI needed to inject a lot of liquidity in the system. They have done by 1 week back. They created 1,50,000 crore worth of liquidity. Uh, some more liquidity in the market would definitely help the market, but symbolically, the rate cut will be useful. The transmission of a rate cut does take a lot of time, but creation of liquidity does immediately help the market. So RBI has done the creation of liquidity. Some more liquidity creation will actually help more. But rate cut has a symbolic significance. So let's wait and watch what happens.
Seems like the market could have already priced in, given how large a consensus it's now turning out to be. But other than that, Shivangi, wanted to get your sense in on the Nifty Bank, because today you're seeing a meaningful move, especially on some of these private banking names.
Has majorly contributed to ICICI Bank, and we've seen that this one's driven a good short covering move in the banking index. Now, Bank Nifty is above 50,000 marks, comfortably holding above these levels, which is quite positive. And this will act as the next, make or break zone over here. So till the time it holds above 50,000, we could expect 51,000 for the next level for Bank Nifty. And a support can be seen near 49,750 marks. But overall, the heavyweight banking names are showing more strength as compared to the smaller ones. So definitely, radar is on those bigger names. Now, also, we could see some sort of aftermath in HDFC Bank, which is also looking quite positive. Now, at these levels, it's kind of making a bottom on the daily frame, turning from its 50 exponential moving average as well. So this one's looking quite positive for the next contributor for Bank Nifty. And we could expect around about 1770 odd levels in HDFC Bank.
Right. Okay, that's the take coming in on the banking pack. In fact, since we were just discussing with Sudeep what to anticipate from the policy this time, let's hear out a couple of market opinion.
Monetary policy, when it comes, they can actually draw a significant comfort from the government move on fiscal deficit being brought down to 4.4. Therefore, they can actually go for an aggressive rate cut. Not only aggressive rate cut, I won't be even surprised if they go for a 50 base point rate cut in the 7th monetary policy. I'll take a bet on 50 base. The fiscal number roadmap is so good, I think they'll have enough room actually for them to cut.
Okay, that's the take coming in on the consensus that seems like it's going to be a rate cut from the RBI this time. Let's see how we're closing in, because it's been a good day. 350 points higher is how we're closing in for the day. Just want to mark what the European markets and pre-market US futures are indicating right now, because it's a lot more tempered, at least for the UK markets. The tariff uncertainty clearly lingers, even though it's a pause at this time. It's not a rollback completely clearly. The pre-market rate for the US futures as well, the Dow is down about almost 125 points, and the Nasdaq futures as well are lingering somewhat into the red. Sudeep, what's your own analysis of how the tariff implications or impositions are going to impact, Indian companies per se, both good and bad?
I think it will have a significant impact. Look, a couple of things. One is, differential tariffs, theoretically should benefit Indian companies, because at this stage, at least, India is not at the receiving end. Assuming that China attracts tariffs and India doesn't attract those kind of penal tariffs, Indian exports should become technically more attractive as far as the markets are concerned. But the reality may be completely different, because let's take a case of China. Now, if China has been hit with a 10% tariff, the way things are and the way the Chinese government and the Chinese administration works, I suspect that China will devalue the currency sharply. Now, once China devalues the currency sharply to make their export, keep their export equally attractive, I think India will have a significant pressure to devalue also, to ensure they are in the race. So I think a lot of uncertainties are there in the economic and macro environment to correctly predict. But end of the day, if leaving aside all these gory technicalities, if you have to say what sector will benefit, I think textiles textile exports from India should benefit. Indian auto components companies should benefit, assuming they are manufacturing in a geography which doesn't attract negative tariffs. Some of the other specialty chemicals, pharma, who are exporting into US will benefit. Let's hope that plays out this way. But I'm not very sure whether it will play out exactly in this fashion because there are so many uncertainties, around us.
So still like some of these chemical counters which could be likely beneficiary of the tariff war that we are witnessing right now. But with this, just a few minutes left for markets to shut shop. Let's start taking the BTST ideas from both of our experts. And Kunal, you go first. Tell us what's making to your list.
So I'll go with large cap names. Kotak Bank is the first stock which I would suggest as a buy. Classical breakout, bullish flag formation for the stock on the daily charts. The breakout point is about the 1900 levels for Kotak Bank. The stock is sailing about those levels. So expecting the stock to move towards 2050 plus mark. This could potentially be a fresh multi-year high for Kotak Bank. Stop loss could be kept at 1850. Reliance Industries is is the other stock which I would suggest as a buy. Had given this recommendation in the morning. With a target of 1300. Now with the move for the stock, especially in the last half an hour or so, would revise the targets higher to 1320 for Reliance Industries and stop loss could be trailed to 1260.
All right, Reliance and Kotak Mahindra Bank, two of the large cap names is what Kunal is liking at this point in time. But Shivangi, would you also like to go with some of these large cap ideas or something from the broader market as well is what is making to your list?
Manappuram, this stock has also been gradually shifting its pace higher. And we've seen that from the last 4 months, it's consistently making higher tops, higher bottom. It's showing a price volume surge today, which is kind of after the consolidation of the last few sessions, which is confirming a good uptrend over here. So recommending a buy here. Now, the next target that we could look at is 215 and with 200 as a stop loss.
Okay, those are some interesting ideas coming your way. Kalyan Jewelers, that's spiked up about almost 13% in trade. We'll skip that. That's really been a special situation name, so to speak. But other than that, ABB is closing in on an 8% gain today. NCC higher by 6.25%. HAL has surged up about almost 6%. There's Cummins as well looking very, very smart, a good 6% traction there as well. And some of these power names as well are looking very strong. Both power financiers as well as, the entire supply chain ecosystem, Tata Power, PFC, REC, IEX, NHPC, all these names looking very, very smart indeed right now in trade. So Deep, do you think when it comes to the entire supply chain of power, you think the valuations have corrected enough and can we now look at adding positions within the power space?
Well, Aisha, I've been positive on the entire power space. I think there's a structural change happening. And this structural change and structural benefit to the sector will continue to accrue in the foreseeable future. So I have a kind of a 5-year time horizon in power. The demand is robust. Every segment of the power industry, whether it's distribution, transmission, manufacturing, components, financing, are going to benefit. And that's what has been happening. Now, yes, prices have corrected and definitely power sector companies can be bought for a long-term portfolio. Short term, it's very difficult to predict which way the markets will move and how the prices will behave. But if you have a time horizon of, let's say, 1 year plus, I think it's definitely worth looking at power sector companies. Manufacturing, like companies like NTPC, definitely a good buy, even at current level from a 1 year plus perspective. If somebody is looking at, the financing, the power financiers, again, good buy from a slightly longer term perspective. You look at the boiler manufacturers like BHEL from a long-term perspective, definitely a good buy. Forget what's happening in the short term. Power component manufacturers, I think one needs to identify the stock, buy in and wait for 1+ year. That's what you need to do in power. All are in for good run.
Stretch your time horizon and you will make money from within the power sector. Sudeep, so good having you on the show. Shivangi, Kunal, we'll let you guys go on that note as well. And I'm going to hand it over to Snehi for the closing trades.
Well, absolutely. Let's take a look at what today's trading session has panned out to be like, because what a phenomenal day of trade we've had today, and this is something new to say because I have not said this in a couple of the trading weeks that we've seen before this. It's seeming very good for our markets today because Nifty 50 is up 1.5%, and we have crossed the 23,700 level as well. Mind you, 23,420, 423 to be precise, was the lowest level of the day, and we have spiked up quite significantly, roughly 350 points from the day's lowest point today. Sensex also, in fact, doing much better than the Nifty, 1.6% higher is where that index is today. More than a 1250 point move coming in on the Sensex in just one day alone. Advance decline ratio very steeply in the favor of the advances today. The broader markets have also done decently well in today's trading session. Nifty mid-cap also largely in line with what the Sensex was doing, a 1.5% uptick coming over there. Nifty small cap that was underperforming the entire market has also pulled up its socks, and 1% uptick coming in on the Nifty small cap index today as well. A couple of Nifty 50 gainers, Shriram Finance, L&T on the back of that order win that they have secured anywhere between 5 and 7,000 crores. IndusInd Bank, Adani Ports, BEL, Tata Motors, all of them trading with gains of anywhere between 3 and 7%. Nifty 50 losers on the flip side, Trend, Britannia, Hero Motor, Nestle. These stocks continue to lose. While we are closing, 42 out of the 50 Nifty stocks are in the green right now, so it's looking very good for these companies. And if you take a look at sectorally, then FMCG was the only sector that was trading in the red and continues to trade in the red even as we speak. However, on the flip side, Nifty Banks was a real outperformer, and not only private banks, PSU banks have also done phenomenally well in today's trade because Nifty PSU Bank was your number one sectoral gainer, 2.5% uptick coming over there, followed by Nifty Energy, Bank, Metal, Pharma, IT, Auto, Media and Realty. That is the pecking order of the most to least gainers. FMCG, however, continues to trade in the red. Names like Union Bank, IndusInd Bank, India Bank, pardon me, Bank of India, SBI, Canara Bank, all of them stood out. On the flip side, what did not do well from the FMCG space is Godrej Consumers, Colgate, Britannia, Nestle, Procter & Gamble. These were the stocks that have closed the day in the red. Quickly taking you through some other stocks that we wish to highlight. Asian Paints, inline set of numbers coming in, but that stock has surged post its earnings. Revenue was below, however, PAT, EBITDA and margins were largely in line with the street's expectations. It was up 5% at one point, a slightly simmered down from that level, but nonetheless 2.5% higher is where Asian Paints is right now. Trend also, however, falling in today's trading session on the back of Shein making its re-entry in India in collaboration with Reliance Retail. So Trend also a stock that was beaten down today, 6.5%. You have Godrej Properties. Revenue was up 3 times on the year-on-year basis. However, pre-sales saw a mere 5% decline coming in on the year-on-year basis, but nonetheless, that stock also gaining 3% higher. Lastly, L&T, like we mentioned earlier, significant order win between 5 and 7,000 crores. So L&T was also a stock that did well. That's how we're wrapping up today's trading session. A very good uptick being seen on the Nifty after quite some time on the street, 1.5% higher and above 23,700 is where we've managed to close for the day.